It's a bit late at night to test your brain, but here is my question to you. Who owns who in the listed property sector? It is, and forgive the terminology, quite an incestuous place. It feels like everybody owns everybody else. The latest assets on the block seem to be Pivotal's property portfolio, valued at about 13 billion rand. It's got income-producing assets, 8 retail properties, 10 offices, 3 industrial sites, 4 active developments. It's very juicy and very attractive. This is the MoneyMakers. I'm Bruce Whitfield. Tonight I'm joined by a deal-making instigator making a play for Pivotal's property portfolio, and that's the Redefine Chief Executive Andrew Konig, who is my guest and join us to talk more about incest in the property sector. It is an impossible mesh for those of us outside the property sector to figure out who owns which bit of whom. It's incredible, isn't it?
Unfortunately, Bruce, you know, the REIT sector is...
Real Estate Investment Trusts.
Real Estate Investment Trust, yes. As you know, it's not too long in the making. It's a new asset class, if you like. It's growing in stature, but it is dominated by a small number of significant players. Yes, there are smaller players along the way, but as you know, REITs are, also victims of financial markets. We are seen as a proxy for bonds, and very often when difficult times dawn, such as they are at this point in time, consolidation does occur, which then contracts that concentration or makes it even worse.
Doesn't the Competition Commission ever go, guys, now hold on a second, you can't marry each other's brothers, sisters, aunties, uncles and cousins. There's just too much incest going on.
Look, South Africa is a very large country, so to get to a saturation is very difficult, but I think what's also important and what makes the Competition Commission's job quite difficult is that tenants do have choice. Once their leases run to maturity, they can exit. So even though you might dominate a node, doesn't mean to say tenants are beholden to such a node. In fact, they are able to move when opportunity allows. So
Isn't there a lot of prime property, though, in the hands of a very small clique of landlords?
Well, I think, given that South Africa is a small market from a real estate point of view, you will naturally find the larger players dominating certain areas where obviously demand resides, hence concentration.
I mean, the concentration strategy of Redefine the last 5 years has seen you go into prime office property. I mean, that's been a very, very big focus. You're the big landlords, certainly in Sandton.
Look, we have worked very hard to wean ourselves off smaller value or lower value properties outside of the economic activity or the dominated activity areas of South Africa. So we're in the main hubs, and we've, through a process of selling off properties and unbundling, have exited those areas where we feel that long-term growth is possibly challenged as a consequence of economic constraints and also tenants' choice where they want to be.
I mean, I don't want you to be too distracted, but that is your playground behind us.
Very much so.
You own a big chunk of that, and that is probably the richest square mile in Africa.
It is. If you look at the moment, about 30% of our office portfolio resides in the Sandton node. Now, about 6 years ago, Redefine had almost zero exposure to this area. So we have concentrated our efforts here because, as you know, long-term growth in your capital is derived from income, and income is from tenants, and so it carries on.
Is your head office still in Rosebank?
It is, and
that's a good node as well.
We're happy to be in Rosebank, given the congestion now that's in Sandton.
But which is partly your fault.
Absolutely right. There's no doubt about that. But Rosebank is actually a very attractive node, and we see it as the next Sandton. In fact, from a market rental point of view, we're getting better rentals on new developments in Rosebank than in Sandton at this point in time.
Explain the phenomenon of the new developments that are happening. These things are holes are being dug in the ground. These things are mushrooming out the ground at an incredible rate, creating more and more office space in Sandton. And I mean, the big Standard Bank building was one of the first of the new developments in that Rosebank node as well.
So I think, Bruce, demand is what's driving the development. But a number of those developments that you see at the moment coming out of the ground were committed to prior to, financial situations that we find ourselves in now. So I do believe that you will find in time a slowing up of development. There's a lot of projects, though, that have to work their way through the system.
I mean, if you look at, let's take City Lodge, for example, which before the World Cup in 2010 was throwing up hotels, and they had occupancy rates of over 70% pre the World Cup. They're only getting back to the mid-60s now, and this is 6 years after the Soccer World Cup. is there not a risk of excess capacity developing in the office space?
Absolutely, especially the lower grade properties, Bruce, outside of,
what defines a lower grade property? Because you guys talk about this like we all know.
Well,
but
so Power put out various guidelines, and obviously landlords then, choose which guidelines they use to determine what is a A to C grade or a premium to C grade property. But effectively, these properties are determined in grade terms by quality of the property, the parking per 100 square meters of space, and also location.
I mean, for example, there's a brand new Bowman Gilfillan building going up somewhere around here.
Well, that's part of our transaction, Bruce, with Pivotal.
And you want to buy Pivotal, which is doing that development.
Yes.
But they'll leave an empty Bowman Gilfillan office or
Absolutely.
6 behind them.
Absolutely.
What happens to that sort of property?
Well, fortunately for us, we're not the owners of that property, but certainly the owners will be challenged there in terms of who will be attracted to a building that was purpose-built for a legal firm. And, they'll have to consider their options.
But you'll have that problem 10 years from now in the new Bowman Gilfillan building, because these things are also, people treat them like they're disposable assets as well. They get knocked down just as quickly as they get built.
Well, I think, Bruce, for us, we work very hard on tenant retention, building relationships. As you know, our tagline is to be...
You're not landlords, you're people. Yes, we know that.
And the whole play there, Bruce, is to ensure that once we have a tenant, that he remains with us once his lease matures. And that, for us, is where we are focusing most of our effort.
Prime office space in Sandton, what's it costing per square metre nowadays?
Bruce, it ranges, but let's just say on a net basis, you're probably looking in the region of about, pick a range, between about 160 to about 190 Rand a square metre.
I mean, up to 200 Rand a square metre is a fair ballpark, and that's a lot of money to pay for often quite extensive office space. But South African corporates, the law firms in particular, are willing to pay it.
Well, as you know, cost of occupancy is top of mind with any landlord, tenant as well as landlord, but from an overall cost point of view, it does pale into significance when you look at what other costs, such as salaries, etc., for professionals cost.
In the last 50 years, South Africa has been through 4 major recessions. We're on the brink potentially of a 5th one. We had 2 in the 80s. We had one in the 90s. We had one in 2009, and now we're on the brink of potentially another one. You guys have got to have a constitution of titanium to be able to try and look through a cycle and see a revenue source 10 years from now. Not next week or the month after, but you've got to be able to have a long-term view.
No, absolutely. Property is a long-term asset class, Bruce. And, capital at the moment is quite, I won't say it's easily obtainable, but there is an element of free money still in the system thanks to the Eurozone and so forth. But I think capital is being replaced as a scarce commodity by courage. Because in this time, the ability to see into the future is impeded by uncertainty. And that's what we're facing at the moment. Uncertainty leads to volatility, and so it feeds itself.
Donny Gordon laid the foundations of Sandton City in the midst of the oil crisis of the early 1970s. I mean, that was visionary in that time.
Absolutely.
At the time, people would have thought he was reckless. Is there a risk of property owners today being reckless for a decade from now?
We believe that we are responsible with our risk management. If you look at our funding model, we don't push the boundaries over there. We work on a loan to value ratio of about 40-odd%, and we manage that very carefully. I think if you overgear, you could well end up in a difficult situation, which happened to a large extent to European property owners, especially in the UK now with Brexit.
I mean, you look at the valuations of Capco, for example, and what's the other one? Inchu Properties. Beautiful, globally scarce resources, massively overvalued for the Brexit scenario, and we've seen those valuations getting pulverized.
Absolutely. Values are a function of yield, as you know, and yield is inextricably linked to interest rates and bond yields.
And optimism.
Absolutely. Look, it's a confidence game.
So how confident are you feeling about South Africa right now? Because we look at all of the business confidence measures, the indices, you look at the potential growth rate, you look at our politics, you look at the standoff between Treasury and government departments. It feels like we have a government at war with itself, and you're buying a property company, or trying to at least.
Bruce, I think once again, uncertainty brings opportunity for us. And that's where we like to play, in that opportunistic space. One has to take a longer term view. And in our view, in the difficult times, you develop for yourself. So our focus here in South Africa is on maintaining what we've got, growing where we can into quality spaces, and then weaning ourselves off difficult spaces in time to come.
Somebody else is taking those assets over, though.
No, absolutely. You know, one man's junk is another man's joy. And, you know, in our investment criteria, it might be a building that's nearing its term. For another investor, he might see opportunity, because you do have funds that are focused more on yield than on total return, where, you know, we are looking for capital growth plus a decent income return.
Talking about risk, I mean, Christo Visa was on the show the other day, and talking to him about risk and opportunity and where he sees opportunity. And he was just saying, 1976, people were abandoning assets, handing keys over to the bank. The Rupert's bought Fleer de Cup was his example. Fixed property, over a long period of time, remains a remarkable asset class.
No, absolutely. I mean, if you just go back 15 years and see the returns that we've generated as a property sector, I think it's beaten all asset classes on the JSE.
What happens if rates go up another 200 basis points?
You know, for us, once again, we have risk processes in place. So at least at any time, at least 75% of our interest rates exposure is hedged. So we're already paying a higher rate in the comfort that we are protected in the event.
How much more are you paying? How much? How risk averse are you?
Well, at the moment, if you look at it, it's ranging between 50 to 100 odd basis points more than the current JIBAR rate.
Is that a big enough cushion?
Yeah, in our view, it would be. I mean, if you're only taking a risk on 25% of your total debt exposure, it's something we believe we can manage.
And if we go into a recession in South Africa, corporate South Africa starts taking strain, rental yields start coming under pressure, what happens then?
We've already been in those situations, Bruce, and we're operating in that environment as we speak. We are seeing flat rental growth if you look at leases coming up for maturity and so forth, because as I said earlier, we'd rather retain you. Our job is to maintain and preserve our cash flow.
They've done lots of deals, and if the pivotal deal does come through, there will be landlords to 5.7 million square meters of real estate in South Africa. Extraordinary numbers. The Redefine Chief Executive Andrew Konig. There'll be other real estate barons and real estate issues to discuss on future Moneymakers. Until next time, good night.